The moment you're a depositor, you are a creditor of the bank. You don't own that gold anymore, and the bank is free to do what it wants with it, which is what happens, basically. A lot of these guys think they have got gold exposure by having an unallocated gold account. Now, when these banks stop offering unallocated gold accounts, which they will just withdraw from the market. They will say, we're no longer offering this service. I mean, from time to time, we've had people like ABN AMRO turn around and, when they've had difficulty getting hold of gold, whatever, to help sort of offset the risks on their gold accounts, they've turned around and said, we're no longer offering this service, and they close it down, whatever. Or the other way in which they do it is they've turned around and said, we can't pay you out in gold, we will only pay you out in the cash equivalent. So, you get these problems. Now, we're looking at huge quantities, as I say, sort of, somewhere between $300 and $400 billion worth of unallocated accounts, and also COMEX futures accounts. So that soaks up demand. The supply soaks up demand. Remove the supply, what happens to the demand? A lot of that demand undoubtedly will disappear because if the bank shut down your account and won't offer you any other service, you probably go elsewhere. You probably don't do it anymore. I don't know. But a lot of people are going to want to buy gold, and they're going to want to buy silver, and they will go for physical. But there isn't really very much liquidity in gold and silver markets at the moment. I mean, silver has been a story in the headlines recently, but it's also true of gold. So what does it do with the price? I mean, the only thing I can think is that the price is likely to be driven sharply higher as these banks remove their account facilities for unallocated accounts. And it doesn't just stop there either, because the same treatment is extended to banks dealing in other commodities. We have got an inflation problem in the sense the purchasing power of paper currencies is going into the toilet. I mean, it's the only way to put it. And then you get this happening. It's not good timing. But as I say, when they started doing this, what we would normally expect is we'd expect perhaps the central banks to come together. I'm talking about the Western central banks, of course, to come together to form a new selling cartel to try and sell a physical gold into the market to satisfy demand, to keep the price down, if you like. I'm sure that's what the Americans would like. I think the ECB would like that. But I really don't see the Germans, the French, the Italians, who are the big holders in Europe, willingly going along with that. And the other thing there are two further elements in this. I don't know if you remember back to 2002, there was a guy called Frank Veneroso, who I wrote about this in the article, actually, we were talking about. And Veneroso did a lot of work trying to track down how much central bank was leased or swapped into the market. And he based this on a number of conversations he had with a guy called Terry Smeaton, who I actually knew. I used to have lunch with Terry Smeaton in the Bankers Club. And in those days, I mean, there was a point, actually, Veneroso was absolutely right that this, physical gold was going out of the central banks into the market and then disappearing. The Bankers Club, where Terry and I used to lunch occasionally, literally backed onto the rear entrance of the Bank of England in a street called Lothbury. And you would see security vans going in and out all the time. I mean, they were obviously carting gold to and fro, mostly out, I guess. So, yeah, that's what was happening. I'm not saying it was the Bank of England's gold. Well, it's actually the UK Treasury's gold, but it certainly would have been arranging leases for other central banks as a means of defraying the cost of storing gold in the Bank of England, if you like, with the Bank of England acting as a custody of their earmarked gold, which is the technical term they use. But what Veneroso came up with was he reckoned that at that time, anything between 10 and 16,000 tons of central bank gold was out on lease or swap. That 16,000 figure was roughly half the total central bank gold reported as monetary gold, part of national gold reserves around the world. Now, I don't know what's happened to that situation. My guess is, and from what I've been told by other sources, is that the gold doesn't actually leave the Bank of England so much anymore. I don't know that it stays there entirely. I don't know whether it's just part of it stays in the Bank of England, but basically they work more off a book entry system. And I think the reason that it has changed is that instead of just selling physical gold into the market, I think we're now in the realms of a sort of financial situation. I mean, it's really sort of trying to sort out problems in either the futures market or the forwards market or whatever, rather than the old situation, which was very, very different. Basically, the cost of leasing the gold was less than 2%, and the return you're getting on US Treasuries was 6% plus. So this was a lovely carry trade. I mean, that's what it was basically being used for. That carry trade can still continue, but of course, it's gone the other way. I mean, you know, you can't really get any yield pickup by, say, leasing gold in order to put it on deposit or to buy US T-bills, for example. So that has fundamentally changed. But what we don't know is how much of this central bank gold is out on lease or swapped at the moment. Now, this is another problem because the demise of these derivative markets, how are they going to get back that gold? Put another way, with gold already out in the market, probably in fairly large quantities, do the central banks have the ability to sell further gold into the market in order to suppress the price? I suspect the answer to that is no, or they would be unwilling to do so. Then there is another aspect to this, and that is that these shortages of gold in the West are the natural consequence of China's campaign to become the most important gold producer and physical gold market in the world. And as well as that, I have admittedly assessed that they have acquired something in the region of 20 to 25,000 tons before they authorized their own citizens to enable them to buy gold and silver bullion. And that was in 2002. Since then, I think it's commonly estimated that the Chinese population, as opposed to their governments, have accumulated over 17,000 tons of gold.